Hello, Namaskar and welcome. Simulation Monte Carlo method. And we are again with a new case, and in this case we are going to study the simulation of cash inflow, cash outflow and closing balance for the next 6 months. And a very small new point in this case is the random numbers given are in single digits. Till now we were covering the sums where the random numbers were given in single or 2 digits, but here now they are in single digits, so we have to take care at the time of writing cumulative probability. And as you know that I refer to this as percentage frequencies whenever we determine the random number ranges or intervals, but this time since the random numbers are in single digit, we shall consider these as not the percentage frequency but frequency per 10. But let's first of all have a reading of the case or the problem. The financial controller of a company has, on the basis of past experiences, the following projections of cash inflow, that is sales as well as collections, and cash outflows, that means direct cost and variable cost, with their respective probability distributions. We have two probability distributions. One is of cash inflow, that is made up of sales, rather cash sales and collections, and another is of direct cost and variable cost, and there is also a fixed operating cost, that is 14,000, but it remains fixed irrespective of the amounts of these two. Yes, okay. Now what should we do? Fixed cost are rupees 14,000 and opening balance of cash rupees 50,000. You are required to simulate the cash flow projections, that means cash inflows, cash outflows, as well as the closing balances for the next 6 months. And random numbers have been given as the random numbers for cash inflow, that means cash sales and collections, and random numbers for direct cost and variable cost. Since the fixed cost remains constant, it is out of these direct cost and variable costs. Yes, as I stated earlier, the random numbers are in single digits. So at the time of writing cumulative probability, etc., we shall take some extra care. Let's first of all prepare the probability distributions. First of all, we have class intervals, and we cannot consider the class intervals directly. So again, we are going to take mid values, which we are habituated in statistics to take mid values. So mid value of these two is 32, 36, 40 and 44. Now cumulative probability will be 0.1 plus 0.3 means 0.4 plus 0.4 means 0.8 and 1. And now let's consider this as, say, 10. Since here it is 1, 1 to 0 to 1 minus 1, 0. So it will be 0 to 0. Then 1 to 4 minus 1, 3. Then 4 to 8 minus 1, 7. And then 8 to 10 minus 1, 9. So in all previous cases, we were considering total as 100 here, yes, as percentage frequency, because the random numbers were in single or double digits or 2 digits. Here they are only in single digits. We have to consider this total as if it is 10. Here also we are going to take mid values. The mid value of 14 and 18 is 16. Then difference of 4, so 20, 24 and 28. Okay. Now cumulative probability 0.2 as it is, plus 0.3 means 0.5, plus 0.3 means 0.8 and 1. As if this is 2. 0 to 2 minus 1 means 1. 2. 5 minus 1, 4. 5. 8 minus 1, 7. 8. 10 minus 1, 9. Just we have to take care, right, at the time of writing these random number intervals or ranges whenever we have random numbers in single digits only. But it is one of the rare cases where the random numbers have been given in single digit. Mostly in case of the problems of simulation, random numbers are given in 2 digits. But I had decided that I shall cover at least one case with single digit random numbers. That's why I am covering this one. And the small, say, cash budget is also covered, projected or simulated cash budget. That is also somewhat interesting point. Now, let's go for simulation. First month, random number for cash inflow is 0. Yes, that falls in 0, 0. That means we can say project the cash inflow of 32,000 rupees. Then random number for direct and variable cost comes to 4. It falls in the range 2 to 4. That means projected direct and variable cost comes to 20 or 20,000. Fixed cost remains fixed 14,000. So 20 plus 14 total cash outflow is 34,000. Now cash inflow 32,000, cash outflow 34,000. So net cash outflow or net cash flow, let's take the term cash flow, common term, in or out, netting of that, comes to minus 2. That means your revenue is, cash revenue is 32,000, cash outflow is 34,000. So we will have to pay 2,000 from our opening balance, which is 50,000 for this period, opening in the first month. So out of 50,000 we paid 2,000. So now on hand we can have 48,000 at the end of first month. Okay, now second month, random number for cash inflow is 6. 6 falls between 4 and 7. That means we can believe that there may be sales and other collections of 40,000 rupees. Random number for direct and variable cost comes to 5. 5 falls in the range 5 to 7. So we can believe that 24,000 will be the direct and variable costs, and 24,000 plus 14,000 operating fixed cost, total cash outflow will be 38,000 against cash inflow of 40,000. So we have net surplus of 2,000 from the cash inflow and cash outflow of the current month, rather second month. And opening balance of second month is nothing, it is closing balance of first month. So again we have reached the same level as it was in the beginning of first month, 50,000 closing balance. That will become the opening balance of third month. Okay, now in the third month, random number for cash inflow is again 6. So we can predict sales of 40,000. But random number of direct and variable cost is 1. That falls in the range 0 to 1. That means there may be 16,000. And 16,000 plus fixed cost 14,000. So 30,000 cash outflow can be there. 40,000 cash inflow, 30,000 cash outflow. Net cash flow will be 10. And opening balance is 50,000. So ultimately at the end of the month we can have closing balance of 60,000. Yes, okay. Now this closing balance of 60,000 will become the opening balance of fourth month. For the fourth month, random number for cash inflow is 8. That falls in the range 8 to 9. So 44,000 will be the projected sales. 0 is the random number for cash outflow, rather direct and variable cost 0, that falls in 0 to 1, so it will be 16,000. Again in this month also 16 plus 14, total cash outflow will be 30,000. And again 44 cash inflow, cash outflow is nearly 30,000. So we can have net cash of 14,000 and our opening balance was 60,000. So the closing balance of fourth month is 74,000. That will become the opening balance of fifth month. In the fifth month, the random number for cash inflow is 0. That falls in the range 0, 0. That means we can believe that there will be a sales and collections, total cash inflow of 32,000. Random number for direct costs and variable costs comes to 3. So 3 falls between 2 and 4. There will be cash outflow, rather direct and variable cost of 20,000. 20 plus 14,000 fixed cost. So total cash outflow can be 34,000 against cash inflow of 32,000. So deficit of 2. These 2,000 will be paid from opening balance. So the closing balance will be now 72,000. Yes, and that will become the opening balance for the 6th month. Sorry, 72. For the 6th month, the random number for cash inflow is 2. That falls in the range 1 to 3. And that means 36,000 can be taken as cash inflow. Random number for direct and variable cost is 8. That falls in the last range 8 to 9. That means it can be taken as 28,000. 28,000 direct and variable cost plus 14,000 fixed cost. So total cash outflow comes to 38,000 against total cash inflow of 36,000. Yeah, 36,000. Okay, 36 and 38. So it is again minus 2. So cash outflow minus 2 and opening balance was 72. So closing cash balance comes to 70,000. This is the closing balance at the end of 6 months period. So this is a brief cash flow statement or cash budget, or rather simulated cash flow statement or cash budget, which we prepared on the basis of the past records of cash inflows as well as direct and variable costs with their respective probability distributions and the information about operating fixed cost and opening cash balance. I hope again this case is also useful for you people to understand the process of solution of numerical problems of simulations. Yes, don't forget to like this and other lectures. Don't forget to recommend my lectures and my YouTube channel PRSHNTPURR to your fellow students and other people. That's it. Thank you very much.